Hello, ladies and gentlemen. This is Christopher Aaron, and it is the 13th of September 2017. I want to thank you for tuning into this video. I thought I would do a little live in session today, and this is the old school style. I used to do the videos this way more often. I like to do it every once in a while just to show you some new things that I've picked up, to let you know there are a few different strategies that I employ here. So whenever I get some new physical bullion, here we're looking at some of my new American Silver Eagles. And I just wanted to show you because we are really focused on the technical action here in this series of videos, primarily. And the reason for that is because I have seen throughout my own career that there are far too many people just telling you to buy, buy, buy. And in fact, we've seen these periods of, several years and many months where the precious metals can go down even despite what appear to be stellar fundamentals. The bank bailouts, the negative interest rates that we've seen over the last 5 years, etc., etc. So if you are new to the precious metals, I would say you've gotten interested in this at a very good time in the grand scheme of things. My analysis shows that the next advance is underway. I'm not going to mince words, and we are going to take a look at the charts. But the point of this channel is to show you exactly what is happening in the metals markets. And mind you, there are periods of time where I think it will be a good idea to sell. It will be a good idea to take profits off the table, or perhaps to wait to invest. So I like to come at this from an independent standpoint, someone who is not only interested in getting you to buy, but someone who really is trying to align with the best interests of the individual investor. So on that note, I like to show, I do a lot of different things in the precious metals. I stack the physical metal. So I wanted to show you. So, my latest purchase is right here. There's a few of these Eagles right up here. These are the 1 ounce American coin. I have a couple tubes that I got here as well. So, this was my monthly purchase, and I just wanted to show you the way that I go about it. Now, everyone is different because everyone has a different time horizon and risk tolerance. What I do is I treat the physical precious metals, this is my savings account. This is how I save my wealth for the long run. I'm not interested in trading this at anywhere near the current prices. So this is an accumulation plan. I endeavor to do this on a monthly basis with anywhere from 10 to 20% of my net income every month. I try to stack away in the physical precious metals. This helps me to sleep at night. This helps me to be sound, knowing that I'm crystallizing wealth on a regular basis. Why do I choose the 1 ounce government coins? It's actually a practical reason, and that is because I like to have the knowledge that if I wanted to, let's say, cross the border with these coins, or with the gold coins especially, this is more important. If I wanted to cross the border, I could declare those coins at the face value of the coin, not at the bullion value. So there are specific times in which I think it's better to be accumulating the government coins than, for example, rounds or bars. And for me personally, I like that flexibility that comes with the international travel options of the face value. So this is my physical holdings. Now, I do a lot also with the mining sector, and I think gold is going to do really well over the next few years. I think silver is going to do even better, although it's going to be more volatile over the short run, so you have to prepare yourself for that, and it's going to lag in certain instances like we've seen over the last couple months. The mining equities are priced the cheapest that they have been ever valued in the history of studying the mining sector, whether it's compared to the actual metals that these companies mine or whether we're talking about the broad S&P 500. So there is a lot to be said right now for making targeted investments in the mining sector. So I encourage you to consider that. This is not an all or nothing proposition, and that's especially one of the things that I want to convey. There's too many people out there trying to say, you've got to put 100% of your savings into the junior mining sector, or you've got to go all in on silver right now. And that is just not true. So much depends on your time horizon and what your personal goals are. So I'm trying to work with individuals, trying to speak with the different groups of people that are tuning into this and saying there can be a multifaceted strategy to this. That said, my charts and my analysis, and this is what we focus on here, are showing that the setup that is underway right now is one of the more powerful setups in the precious metals market. So if this is the time where you're just beginning to wade your foot in, this is one of the rare times where I will actually come out and say, I think there is a strong move setting up over not just the next 5 years, which I think is most people's more or less time horizon, but I think there's a strong move setting up over the next 6 to 18 months, specifically, depending on how this plays out on the charts. We will look at the charts in just a moment. So this is the time, I think, to actually be finalizing some of your near-term purchases, because you do not want to chase these markets higher once they've gone up. You know, once gold is above 1480 or 1500, you do not want to be chasing it higher at that point. And I know a lot of people will be doing that because they won't become interested until that point. So I'm here to tell you that a strong move is setting up. We will see the potential for this move on the chart, even though we've seen a lot of weakness just over the last couple of days. I think this is setting up nicely. The last part that I do is the short-term trading, and there are some short-term traders out there. There's nothing wrong with that. However it is that you go about approaching this market, I hope to offer something for you from an independent perspective. That's the bottom. Our bread and butter, the price action on the charts themselves. Looking at gold here, we are already into the overnight hours in Asia on Thursday morning. Seeing some continued weakness coming back from the recent highs right around 1360, back below 1320. Is this reason to panic? Is this the start of something greater, more significant of a decline? Let's take a look at the charts. You can't tell anything from the short-term action, and that is the point of bringing up the short-term charts. Sometimes there is usable information from these short-term charts. Today, however, there is not. So let's switch over and look at silver. Very interesting. Silver not making a new low yet for this move lower, right? Not breaking down below today's intraday low as gold was. So we see a slight improvement in the gold to silver ratio. And when you follow things like this on a close basis, when you see relative strength in silver, it can indicate underlying strength in the entire complex over the near future. So this is something to pay attention to. Silver still giving back, I believe the high for silver was just over $18, $18.20 or so for a spike high. So we're coming back about 50 cents. The look of it over the short run is that both metals are moving lower. Absolutely, that's how it looks. However, what is going to come over the intermediate term is our primary focus. And we do have to look mostly at gold at this point. Silver stackers, I know you're very interested in the white precious metal, the other precious metal. I am as well. I'm heavily invested in silver, but you have to pay primary focus to gold at this point because it is the historic store of wealth. This is many hundreds of times the market cap of silver, and it is receiving the bulk of the attention. And for that matter, the technical analysis is much more clear on gold. Gold is leading at this point and silver is following. It's lagging sometimes. It will probably continue to lag, but we have to continue to look at gold primarily, and that's going to tell you, with some slight differences, where silver is heading. We're pulling up the 1.5 year, almost 2 year now gold chart, making a functional retest of the 2016 highs here. at 1378. That was the high for the contract in the futures market back here. So we're looking at a functional retest of 1378, even though it didn't get quite to that level. 1360 and change was the exact price over the last week for spot gold. We're seeing some of those gains given back. Now, before I go any further, I want to just back this out for a moment. And we were just looking at this last here, the 2 years. Does anything look different about this most recent surge here to you? Does anything look qualitatively different, being the surge here from July up through the present? Does this look different at all than any of the other spikes that we have seen over the last year or so? This spike right here. Just from a wide angle perspective, I think we can see pretty clearly here that this surge is doing something quite different than each of these last mini surges, these attempts to break out of this long-term downtrend. So when we see a legitimate breakout that we've seen here of this very simple yet powerful trend line, we're looking at something here that is of a different magnitude. It's of a different characteristic than the previous surges. If you can't see that or you disagree with that, that's fine. You don't have to agree with the analysis that I give here. I'm never trying to come out and say that I have the end-all be-all. This is a system that works for me. It stacks the odds in my favor. It works for me more often than it does not, but it's never going to be 100% perfect. So if you have another way that you can interpret this surge here that we've seen through this long-term downtrend, I ask you to post a comment and let me know, because I do like to keep my eyes open to other forms of analysis. So thank you for that ahead of time. That said, this looks of a different characteristic than the prior surges here. So when we zoom this back in and we see this surge clearly breaking this long-term downtrend, you've got to start to change in your mind your expectations for the intermediate term future. Something different is happening here in the gold market. A lot of people lost interest in gold over the last 6 months because we were continuously talking about this triangular shaped consolidation here, up, down, and it was getting really boring. And this is what markets do to try to flush out the Johnny-come-latelys, to use that colloquial term. Those who only became interested sort of late in 2016 and really have no business in sticking around this market for the big move that is setting up. So that's what markets do. They frustrate the latecomers, and this is why you have to regularly revisit that long-term perspective for your own benefit. So I do it at least on a monthly basis, and I suggest you consider doing something similar. This breakout right now, and we're starting to give back some of these gains. Where is this going to bottom? I'm going to make a call right now. I'm going to say the bottom for the current decline is going to come here between the 1280 region and the 1315 region. So this is not derived, this is not for futures traders to be trading on my every word right now. If you want to do that, you have to dial this in even more closely. We do that from time to time. But this is designed for the medium and the long-term investor. How am I arriving at this target? There are a number of powerful technical levels that come in around this target, which is why I'm willing to stick my neck out at this point and say that the bottom for this current decline is going to come here, and then we are rounding up and it is going to break through 1378. I'm very confident about that. This bottom zone in here, we're talking a number of levels. First of all, the 1300 level, we can see that representing the bottom part of this Trump reversal resistance. This was hit on 2 occasions, including the false breakout back in June. It failed on 2 occasions. Clear breakout, not just a little one day and then reversal. Clear breakout, holding for over 3 weeks now, coming back down into the vicinity of the breakout. It's getting ready for another retest in my book. Another important level to watch for, we're talking Fibonacci retracements. Look at the silver level right here. Look at, we're drawing Fibonacci retracements levels from the 0% of the retracement, the starting point for this move, which was 1205 here and change, up to the recent peak just above 1360, and we're drawing Fibonacci retracements. Now, if you can barely see these silver lines that I'm talking about, good. There is a reason for that, and it's because I don't want to distract you with the silver lines here, the Fibonacci retracement lines. I want you to look at them and pay attention to them, but not more so than the horizontal support and resistance. So we've got the horizontal support and resistance right here, which should now act as support at 1300, round number. We have 2 important Fibonacci retracement numbers coming in within $20 of this level. The 38.2 retracement coming at 1301, and the 50% retracement coming in at 1282. Now, there is also a linear trend line that I could draw from the bottom if you follow my mouse up, connecting these lows, that comes right in here at 1305. I haven't drawn it because it's a very steep trend line. And one of the rules to pay attention to in technical analysis is that the steeper that these trend lines form, the less significant that they are. So if this was the only technical level that I was looking at, I would be wary of it. That said, this trend line, which would come in right here at 1305, corresponds very nicely with these 2 Fibonacci levels and the important horizontal support at 1300 round. So what I think is setting up here is some continued weakness over the next 1 or 2 weeks, and I think we're going to see a nice bounce at this 1300 level, plus or minus $20 here. The higher that this bounces above 1300, the more bullish that this outlook is going to be for the move that comes up over the rest of this year and extending into next year. What I'm saying, in no uncertain words, is that if you're at that point where you're kind of holding off, or you've been considering, getting into some of the more leveraged investments in the mining sector, this last dip here should be your final opportunity to do so for the move that is setting up over the next 6 to 18 months. We have higher targets, most likely above 1500 coming for this move. You do not want to be chasing this market higher several months from now once this major breakout has already happened that I am predicting is coming. This is one of the nicest technical setups that I've seen in a long time. And you'll notice when I'm not feeling as sure from a technical basis what's happening, go back to some of the videos from 6 months ago, 3 months ago, and I was talking about these false breakouts. I was saying nothing has changed here. We still don't know, right? This triangle could still resolve lower. This triangle has resolved. So I'm very confident in the retest that is setting up here, that this is your opportunity to make some final purchases for the current move. There will be opportunities again a year or two in the future on the next dip that manifests, but for the time being, get ready. When we see this retest, I think gold is set to break the 2016 high in no uncertain terms, and then the mainstream media will be coming out with the articles at that point. You don't want to be following the mainstream media, though. You want to act before that is happening. How can you find out more? Well, we publish a premium service. This comes out at least once a week. This basically contains all of the research that I require myself as an investor. In other words, there's no way that I could make the investments or the trades that I'm making without the research that I compile every week. And I just publish it because it's like I figured that if it works for me or if it's useful for me, there have to be other people out there that find it somewhat useful. At least it tips the odds in your favor. That's what the premium service is. It comes out once per week at minimum. We do a combination of text and videos like this that are even longer than this one that get really in depth as to what to expect in gold, silver, the mining equities, specific mining equities, buy and sell signals, as well as looking at a lot of other things like the dollar and the commodity complex, which all play into this. How else can you find out more if you don't want to subscribe to the premium service? I do publish a lot of free stuff out there as well. So, subscribe to this channel. That's free. Just hit the subscribe button so you'll see all the latest videos that come out here on YouTube. I try to publish once per week on YouTube. The other thing you can do is Twitter. I basically publish all the free articles and videos on Twitter. So it's kind of like a one-stop place that you can find everything that's going out. All the analysis on the precious metals goes out on Twitter. goldeagle.com, and I'm going to publish a link to that. goldeagle.com is the site that I am an editor for, and I publish an article on there several times a month. It's proprietary, and so if you want to check out the type of analysis that we do, you can go to goldeagle.com, and it's all free. All the articles out there are for free. The last thing that I do is a site called BullionExchanges.com, and I know the owners of Bullion Exchanges really well. I've worked with them for a long time. They have a great physical dealership, so if you want, you can check out. By the way, you can sell to them too, so you don't just have to buy all the time. It can be if you're looking to sell. I work with Bullion Exchanges. I publish a weekly blog that goes out on BullionExchanges.com. I'll have a link to that as well. A lot of free resources, a premium research for those who want to get even more in depth on the specific signals that we're using to buy and sell here. There is a ton of opportunity, and if there's one thing that I can say just to sum this up before we get to the charts, it's not an all or nothing. There are people out there. I just don't like the business model of Chicken Little, the sky is falling, you have to do it all now, because if you don't, silver is going to $100 or $200 an ounce next month. It's not. It just is not. But that said, there is an important move setting up, and I do think this is a very important time to be finalizing your purchases for the intermediate term, which is setting up here. You don't want to be following the mainstream media, though. You want to act